So we are starting today's vlog by meeting with Forex Trader Funding. They emailed us a few days ago saying that they wanted to meet with us, which is quite surprising because our YouTube channel is still very new. At this point in time, we're only at like 900 subs, not even, maybe 890 or something like that. So yeah, I was pleasantly surprised that they noticed that we were doing some good work and they wanted to talk to us about a potential partnership. So I'm gonna record just a little bit of footage. I'm not sure how much I can show in the meeting, but yeah, brought them to our restaurant, obviously.
Don't hold back, long as it ain't beyond my back. I know it's hard being sincere when it feels like it's all bad. Just smile, the world is watching. They seem so concerned, but they can tell me nothing. I might just let it burn.
So last week's meeting with Apex was actually quite good. Honestly, we're still thinking about what we want to do regarding Tenacity and Apex, and I know they're a big firm. I know they're one of the largest, if not the largest, futures firms at this point. But to be honest, I still don't have a clear decision just yet at this point. I'm gonna have our daily performance review calls with the students, and I'm actually in a trade right now. Let me show you. We are currently in a Euro Kiwi short that's running 4.6k in profit here. This is the trade. We are already at break even here. This was the structure that we took. It's a classic continuation structure in my strategy that we will go into soon enough. We are running very hot in this trade right now. We are about to lock in some profits here because obviously this trade is just playing out really perfectly, and so we're never gonna let this go back to break even. On that note, one of my students are also in this trade and he has also just locked in 1%. So I'm going to lock in 2% here for sure. Yeah. And you didn't take the pound CAD loss yesterday. You're doing even better than me.
Yeah, man. Mungkin karena
we just got taken out for almost 3% in profits, where commissions ate it up a bit. So 5.9k. Not too shabby, not too shabby. This is what it looks like on the charts. And yes, we just finished our session here with the students. This is the trade. And I will break this down for you first thing tomorrow because guys, honestly, right now, I am fucking gassed. All right, I'm gonna chill. I'm gonna watch some F1 Drive to Survive, eat some food, relax. It has been a while since we've been here. And ever since moving to the apartment, I think I am gonna end my stay in this office. It's been 2 years almost, right? This June, it'll be the last month that I'm staying here because my apartment's a 3-bedroom apartment. I just think I can do a better job in making one of the rooms an office that looks nicer than this. I mean, this is fine, but I think with my own apartment, I can do a lot more in terms of modifications and all that. And it's also a lot more cost efficient, right? Once I have an office in the apartment. So yeah, I just don't think I'm going to keep this place. So I'm gonna try to vlog as much as I can in the office before we say goodbye to it. This is the last 3 months we're gonna be here. And we're gonna start off today with talking about our Euro Kiwi position. Beginning on the weekly chart here, as usual, we do have a doji close from last week, right? That candle right there. What does a doji mean on the weekly chart? It simply shows us that the market is indecisive, right? After a strong push up, completing into our high value area, which is macro resistance from here, right? That is a very old resistance level from March 2020. That's why we call it a macro resistance level. After it completes there, it prints this beautiful doji to show us that, okay, the market is now indecisive about where it wants to go. Now, the key point here is that a doji candle isn't necessarily a reversal candle. It's not. So don't go too far in your interpretation. Just know that, okay, this might be the beginning of our downside reversal. So still trade with care. Don't be too aggressive on dojis, okay? That's the key tip here. All right, so we are leaning bearish because of the doji, but we're not super confident. Once we get to the daily chart, we can find extra confidence because this is a wonderful bearish engulfing rejection on that daily close. So now in the daily chart, we are firmly in a bearish bias on the higher time frame. The next key tip here would be looking at this price action here because that is a large correction. And usually we don't like large corrections like this because price essentially did this and then it did this and then it came down. Usually we don't make moves like this, right? We don't like to trade this. However, this is the key tip. When you get a really powerful push down like that, that's a big candle, right? It's more natural for the market to create an exaggerated correction before the follow through to the downside arrives. That's how market mechanics work. Because if the move is extremely strong, imagine it's like you jumping from a pool from very high up, right? And let's say you're heavy. You jump into the pool, imagine all the water that will splash because of that. That's the analogy I would use here. When the market pushes down from a high value area with an extremely strong candle, it's more natural for price to create this knee-jerk reaction before the follow-through arrives. And so that's exactly what we receive here. Now we go to the 4-hour chart. We can see even more clearly how powerful this move down is. This is what's known as a crash move. It's extremely powerful. This is somewhat unnatural for one single H4 candle to move this much. How do you know that? Well, just look at all the price action right now in the screen, for example. There's never been a candle this large. That just shows you that this is not a normal piece of price action. This is very exaggerated price action from the tariff wars, right? Which is what's going on right now. And so we get the knee-jerk reaction here in this large correction, but that's also the key observation we need to make. What is the nature of price here? What is price telling us? This is not an impulsive move. This is very much a corrective move. And so on our strategy, trading impulse, correction, continuation, this actually still falls in line. This is still okay. So knowing that this is a corrective move, we are looking to trade the downside follow through. Now, the best place to trade it is this, which is the trade that I took yesterday, the one that I showed you before this. And why is that, right? The reason why this is the best place to take the trade is because on the 1 hour, we see that we have this strong local support level that price has broken down and instantly follows up with this continuation structure in the ideal placement, which is right underneath our broken support level. We love seeing this. This is the strongest edge that we have. And so now we refine our structure to the 15-minute, and that is a wonderful structure, guys. That is a beautiful 15-minute MTI structure, meaning we have 3 touches on top. We also have the arcs, right? That's wonderful. That creates like a face, like a sad face. That's always a good thing to see in our continuation structures. We also have equal spacing to show that this is just a very high quality structure, which means we should have maximum confidence in trading this. So once we receive the rejection here on the 15-minute, even though the rejection isn't perfect because of the existence of these wicks, we don't really care because we know everything else just lines up great. You can't keep expecting perfection in your trades. Sometimes a little blemish is okay if everything else lines up very nicely, which it has, because the quality of our structure is just magnificent. Now, the final thing is, you can actually refine your entry on the 5-minute here because this is a pure 15-minute structure. Okay, so the initial target for my trade was this 4% here. We had a max run of 3.6%, and so I just locked in 3% profits right here, and that's where I got tagged out. If you only have like 0.4% left to your original target, this is the moment for you to be extremely defensive in locking in the profits you've already made. Hence, me only giving like a very small amount of breathing room for price to move, right? Because we don't want to be giving back our profits that we've made if we're only targeting 4%. That's why I locked in 3. So yeah, and this is how the trade played out since, right? So this is present day right now. Price just kept moving up, so we literally captured the maximum. I'm very happy with the results here. happy with my management. And now we're actually looking for another trade in Euro Kiwi. So what we are seeing here is a retest of our point of liquidity right here. And how has price moved up here? This is yet another correction. Because an impulsive move is this. It's literally a straight line. That's an impulsive move. Whereas this is more corrective because it goes up like that. That's good because we know that corrective moves often give us the next impulsive wave down like this. How do we enter a trade like this? Essentially, we are looking for an impulsive push down to break these local lows, followed by our ideal placement flag once again. So this is literally my strategy. It's very similar to the trade that we just took here, just in a new context. So that's the plan for Euro Kiwi. If we do take this trade, I will bring you guys through it again.
It's very, very tame. Jadi kayak I'm still stuck on that theme,
Yes.
right? Where maybe the short is.
So I currently have a student who is struggling a little bit. He's 2 months in, I believe. And the reason for that, and this is a really interesting one, right, is because when he first came in, he told me he wanted to do things differently from the way that I usually teach, which is I purposely restrict my traders from learning about everything all at once, just because I used to do that in the early stages of my career, and that really fucked me up. Curiosity left unchecked can be a really dangerous thing in trading because it just splits your focus a dozen different ways, and you just don't have enough focus to go all in on one specific concept or setup to really master it, especially when you're risking capital, money. That kind of thing, that kind of mastery requires you to be super fucking focused at one thing. But this guy didn't want to do that, and so, I told him, sure, you can take a month, to try it your way, but then after that, if things are not going well, then we have to kind of change things up and you have to do things my way, right? So that's where we are now and where we have been for a little bit. So I'm hoping to see a real change in his progress and how fast he's progressing. But that's the key lesson that I want to bring up here is that, guys, if you're just starting to learn how to trade, don't try to learn everything all at once. Trust me, that is the worst thing you can do. So please don't do that. Commit to one strategy, commit to one community, commit to one mentor. And also, I hope whatever mentor you choose is able to kind of control your learning curve so that it's optimal instead of just, here, fucking learn everything. I'm not even gonna reply your text or anything like that. That's not gonna help you at all. That's just a terrible decision for you to make and it's a waste of money. All right, so we are off to an early start this morning at 6 a.m., which, as you all know, I usually don't get up at 6 a.m. because I sleep a little bit late at night, right? Usually I wake up at like 8 or 9 a.m. But today is a special day, and as you can see, I'm back home. It's because today is Good Friday, so I'm going to church in like a few hours with the family. But before that, we have some time to recap our weekly performance here. So bringing you over to Mental, my trading journal. As you can see, we have taken 3 trades this week. The first trade ended up in a loss on Monday, and that's the trade that we're going to be talking about right after this. And then we had our $6,000 trade, which we already broke down. And then yesterday, I had a trade on Euro Pound that I exited for break even. So before we jump into trading view, I just wanted to show you the reflection that I did on this trade because it's very important for you to see how I handle losing trades even though they're very high quality, right? So as you can see, this is what I wrote. I am most proud of how I bounced back from a negative start to the day to a positive state during my evening forecast, right? And then I'm thankful for preparing and executing an A+ trade. So this is like a really good trade in my strategy, but it's still lost, right? This is the reality of trading that we can't really avoid, unfortunately. And so for that reason, we want to be really respectful of how we behave in these scenarios. And that's the reason why journaling is so important, because if you don't journal this stuff properly, then it's very easy for you to get tilted, because naturally you would feel like you deserve to win because you took such a good trade, you did everything right, but that's not the reality of the market. And that's why psychology work is just so important. So back to this, I said, taking a loss in such a great trade is a bummer, right? So be honest. You don't have to like sugarcoat things. You can just observe how you're feeling. And then I said, but I'm reminded of the key to profitable trading, which is the ability to take good losses and keep performing at a peak level. Those are just facts. The reason why most traders fail is that they tilt in situations like this. They let emotions take over instead of letting their edge play out over the remainder of the month or quarter. As long as I'm able to maintain composure in times like these and continually commit to performing at a high level, no drawdown will last. And I wasn't even in a drawdown here, but I just wanted to make a point to myself, right? And sometimes we already have the knowledge, but we just need to be reminded of the knowledge that we have, right? And so that's why journaling is so important as well. You're always writing things down to remind yourself of the truth, right? Because if not, it's easy for your brain to just think stupid things. You get tilted, you start trading really bad, and then one loss turns into 5 losses unnecessarily. We really have to avoid that if you want to be profitable in trading. All right, now let's jump into trading view. Okay, so starting from the daily chart on pound CAD here, what do we see? First of all, we can see that price has created a very strong origin impulse wave down, which is always the first thing we look for in our strategy. The reason for this is because we want to know when the market has settled on a direction. And the way to know that is to identify a strong origin impulse wave to either the downside or the upside. Now, the next thing we want to see is some form of continuation for its follow through. So that's what we're looking at right here. Some really clear rules when we're looking at corrections and continuations is that they should not exceed 50% of the first origin impulse wave down. So if it exceeds the 50% mark, for example, if it does this, then you're fucked. The move is gone, and so it's time for you to look at other opportunities. But as long as it's remained under the 50% mark, then you're okay. So that's a nice key tip for you guys. The next thing that's good that we can see on the daily chart is that we are still underneath our broken lows here, because price did make a range over here, and it was trying to make a continuation structure to the upside actually with this as the origin impulse up, right? This is the origin impulse up. We tried to make a continuation structure, and it has since been invalidated to the downside. And so now we are looking for the continuations short. All right, now moving into the 4-hour chart, this is what we have. We identify our point of liquidity on the H4. This is our value area that we're looking for trades from. And what gets even better is that once we get to the H1 chart, we actually find a beautiful reversal structure in this ascending channel right here. So in my strategy, this is a very clear reversal structure where we have clear tops and bottoms, right? We also have very clear arcs within the structure to show us some corrective price action, right? And that's good because corrective price action usually leads to a reversal. And so when we find exactly this structure, we love that because this lining up with this POL gives us the value area for us to go short right there. And so that's exactly what I did here. The only mild negative confluence with this trade is that this rejection candle, even though it is shaped well, the size is bad. So let me go deeper into that, right? What do I mean when I say the size is bad? Usually, the size of the rejection has to be at least half of the candle, where technically this is half of the candle. If we count the wick, right? This is not half of the candle. This is just shy of half. So the reason for this rule is that we want to see the rejection being strong enough compared to the candle that approaches the value area, which this is just like kind of borderline, but this alone is nowhere close to enough to make us ditch the trade entirely. A mild negative confluence is okay as long as everything else lines up in your trade. So I took the trade like this on the break of the lows with my stop loss above somewhere along these lines. And my target was about 4 to 5%. Now I'm gonna post a screenshot of the loss somewhere around here. And essentially this is what happened in the trade. Got instantly destroyed basically, which is kind of sad because this is actually a really good setup in my playbook. But that goes to show you that just because you have an A trade or an A plus trade, it really doesn't mean that you're going to win. And that's one of the biggest mental hurdles for any aspiring trader to overcome, because it doesn't really fit our natural mindset, right? Usually we think if we work hard, if we do good things, we will be rewarded. But that's the crazy thing in trading. That's not always true, because the short-term randomness is really there, because this is a probabilities-based business. And so that's why I really recommend you guys to just journal a lot. That's a key that all profitable traders do. I can promise you that much. If you don't journal, it's not good, guys. Just do it. Just do it. Now we're on the way back home to the apartment after church for Good Friday. I do need to set up my robot vacuum that I just bought. Hopefully it's going to be easy. I'm not sure, but let's see. But yesterday, one of not my students, just a member from the Discord, asked me a really good question that I wanted to talk about right now, which is about how do you spend less time on the charts and how do you make sure that you're not getting overly emotional when you're trading. So the answer to the first question, how do you spend less time on the charts? It's by making sure you're starting your day with a prep session, right? Or a forecasting session, which means that you are spending, like, let's say 1 hour in complete focus, right? Preparing for the markets, preparing your plays, what pairs are you looking at for the day, how are you planning to trade them? So all these things are done when you're at peak focus, right? So throughout the day, after your plan is finished, you can just refer back to your plan that you made when you were focused, and then you execute whatever you said on the plan. That's the best and most sustainable way to trade, I think. One sec, guys. I'm about to go into one of the tolls. Let me show you what it looks like here in Jakarta. So we go into one of these, and we have to pay about like 20 tau, which is like $1.20. Oh, no hands, no hands. Oh, all right, we good. The second question, how do you not get overly emotional? The easiest answer and the best answer is actually to have a very clear strategy in place. You need to have clearly defined rules of how to enter trades. You need to have a clearly defined rule on how to manage your trades once you enter them. Where do you put your stop loss? Where do you put your target? So if you're a new trader, that's where all your focus and energy should be going. Once again, we are raining and my car is getting drenched. I don't know if the camera can pick it up, but yeah. This is why I haven't been washing my car, because, dude, you wash your car 3 days later, it rains, and then it looks like shit again. Well, he never looks like shit, but you know what I mean. Home sweet home. Oh shit. We got the Ecovax D-Bot N30 Pro Omni. I don't know what any of this means, but Grok says it's pretty good, so I'll trust Grok with this. Oh. Alright, so the bad news is that I have to purchase the whatever soap water thing separately. And then I have to learn how to use this whole thing, because it's not... I don't know. Let's see. Yeah, I'm not gonna do that right now, man. I'm just gonna leave this shit there. Right there. And I'm gonna eat. Currently in a trade here in Kiwi dollar, still hovering around a small loss here. We're gonna relax, we're gonna take a sauna and see how the trade plays out. We just got back from the mall. We got some Krispy Kreme for Black Mirror tonight. We're gonna watch with a couple friends. Usually I don't get this brand, but you know what? Look, they said it's the donut that started it all. Next, I also got some Monster Curry. I have some books that I got from Gramedia, which is like a Indonesian bookstore. In fact, I actually thought that they only sold Indonesian books. This is the first time that I found out that they did sell English books. It's just that they put it all in the back, you know? I've read this book before, but I have never finished it. I only read it like halfway, I think, or a third of the way. And then I lost my copy. I think I gave it to somebody or something, so Gonna try to finish it this time. And then I got this, Contagious. I hope it helps my YouTube journey, you know? It's about how things get viral, so who knows? And then another YouTube book, well, you know, creativity stuff. The Creative Act, A Way of Being. So this book, I've read some mixed reviews on it. Some people say it's not the best. Some people say it changed their lives. And usually those books are the best, right? In my opinion, at least. So yeah, we'll see. We'll see.
A few months ago, I said no.
Price is just not moving from Good Friday. It's just been ranging for hours, so I'm just gonna close this trade. Bye-bye. Gonzo, how much did we lose? $93.
Basically, this is the sort of thing.
What you doing, Ruiner?
Really like a dishwasher, Alex.
Did you get me this as a housewarming present, mate?
Yeah, Mike, for your dishes.
Man, you an OG, bro. Let's talk about our Kiwi dollar position to end this vlog. Let's do this. Let's begin. So Kiwi dollar here on the weekly chart, we know that we are bouncing from macro support, right? That's right here. We can see the macro support here and another one here. And we have already made a very significant move at this point, right? Just for context, let me show you. We have moved 480 pips, which for a dollar pair is a lot. Now that coincides very nicely with this point of liquidity for our higher time frame value area for us to look for downside reversals. Because the logic to this is that it's very rare for a market to move this much to the upside and this strongly, right? Look at these huge candles. Maybe the second one was just okay, but the first one is really just a very powerful candle. To the point where it's more likely for it to have some kind of downside reversal when it reaches a value area. It doesn't have to be an all-out reversal all the way back to the downside, but even a small one can be a very profitable play for us. So we don't need it to be like this huge move for it to be good for us. So now getting into the daily chart, we find further positive confluences as we find this reversal structure, which we call an expanding structure. We have three very clear points, 1, 2, and 3. And then we also have captured liquidity from our value area here. Capturing liquidity is always a good thing because most of the time, if price is gonna make a reversal, it needs to pierce above the value area to see what is actually going on above this level. Are there still buyers in the market? Can this market still sustain its upside, or is it over? In order for the market to know that, it needs to pierce above the relevant value area first. It needs to know what's going on there. And then after we confirm that there's nothing going on there, that's when the market can comfortably reverse to the downside. So once we get to the 4-hour chart here, we see that price has captured liquidity right here. And then this is what happens next. We push down very strong on the H4, right? That's a beautiful origin impulse for us to finally pay attention to the short setups that we want to find. So then we get into the 1-hour chart, and this is what we find. This is the first continuation structure after the high quality origin impulse to break back down into range, right? This is the range that we're breaking back down under. So this is a beautiful setup for the shorts. And as if we needed more confluences, which we don't, but we do get it here, we also have another expanding reversal structure that has also completed 3 tops and also captured liquidity above the third top, right? You can see that price has made a base here that we have impulsively broken back down from. So that's a wonderful price development right here. This is beautiful. Okay, so once we find the liquidity capture from our correction, right? This is our entry setup. We find an origin impulse into the continuation structure. This is a variant where we don't really have strong development. Strong development would look like this. So clear tops and bottoms once again, right? My strategy loves clear tops and bottoms. But if we don't get that, then we need to enter in a safer way, which means that we need to wait for a strong H1 close that also captures liquidity above the highs. And that's exactly what we have here. We captured liquidity through this wick, and then we close with this strong body here. And so I set my entry halfway up the candle. If you guys have been here before, you know this is how I enter my moves. And I highly recommend you try this whenever you find a strong candle. This is best entered using a limit order halfway up through the candle. And then we get tagged in here. But because this was Good Friday, we basically didn't do anything, right? It's just a bunch of like nothing. It's just no liquidity. Everybody's on holiday as they should be. It's Good Friday, right? So yeah, I got out of the trade with break even. The screenshot will be somewhere here. And yeah, that's essentially the breakdown of how we trade this kind of situation where price makes a really large move on the higher time frames, where it's extremely likely that price will give us a downside reversal. Now, we can delete all this because this is now over. So for next week, we also have the same bias on Kiwi dollar here because now we have a higher time frame confirmation through that high quality bearish engulfing close on the daily. I know we didn't engulf the wick, we only engulfed the prior body, but that's okay, right? It's not really an issue. This is good enough for us to be like, okay, now this play is even better than when we took it on Friday, because now we actually have confirmation from the daily close, whereas previously we didn't, right? So this play only got better, okay? So we're still looking for shorts next week. If I get it, you'll see it in the next episode of the vlog. See you later.